In a world where financial advice is as plentiful as cat videos on the internet, there lived a man named Bob. Bob was your average Joe, except for one thing: he was convinced that he could outsmart the stock market. Armed with nothing but a wealth management book he bought from a garage sale and a plethora of YouTube tutorials, Bob set out to build what he called a diversified portfolio. He imagined himself sitting on a beach in Hawaii, sipping a coconut drink, while his investments worked tirelessly for him. What Bob didn't realize is that the only thing he would be sipping was his tears of financial regret. Bob's first step was to invest in tech stocks, because everyone knows that technology is the future, right? He put all his savings into a company that claimed to be the next big thing in virtual reality cat videos. Spoiler alert, it wasn't. Next, Bob thought, why not diversify with some good old-fashioned retail stocks? He invested in a chain of stores selling overpriced scented candles. What could go wrong? Who doesn't love a good candle? Well, Bob soon found out that not everyone shared his passion for cinnamon-scented wax, and the company filed for bankruptcy faster than he could say candles are overrated. Feeling the heat from his flaming losses, Bob decided to try his hand at something more stable: bonds. He bought a bunch of bonds from a company that promised high returns but turned out to be about as trustworthy as a three-legged dog on a tightrope. After realizing that even his bonds were going south, Bob was starting to feel like he should have just stuffed his cash in a mattress. But Bob wasn't done yet. He was determined to diversify further. Next up, cryptocurrency. Because what could be more stable than digital money that fluctuates more than his money? He threw his money into a coin called Dogecoin, thinking it was a solid investment because, hey, who doesn't love dogs? Little did he know, Dogecoin's value would drop faster than a hot potato at a family reunion. Bob's portfolio was now a colorful mosaic of losses that made Picasso look like an amateur. As he stared at his investment app, the screen looked like a horror movie, with red numbers flashing like warning signs. His diversified portfolio had turned into a diversified disaster. Bob decided it was time for a financial intervention. He called up his buddy Dave, who was known for his successful investments, hoping for some sage advice. Dave chuckled, "You wanted a diversified portfolio, but all you got was diversified losses, huh?" Bob sighed and said, "My portfolio looks like it was painted by a blindfolded monkey." Dave couldn't help but laugh. "At least you have a sense of humor about it." "That's half the battle." Bob thought for a moment and replied, "Sure, but my sense of humor isn't going to pay my bills." With newfound determination, Bob decided to educate himself properly this time. He enrolled in an online course called Investing for Dummies, because if there's one thing he learned, it's that he was definitely a dummy. After months of studying, Bob felt ready to re-enter the investing world. He chose to focus on a few solid companies instead of trying to catch every shiny object. This time, he was armed with knowledge, a sensible plan, and a realistic understanding of market risks. And while he still had scars from his previous adventures, Bob was ready to face the stock market once more. As he clicked buy on his first new investment, he chuckled to himself, "I wanted a diversified portfolio, but this time, it's going to be a diversified success." And with that, Bob learned that sometimes, less really is more, especially when it comes to investments.